Hey everyone, I hope you're having a great weekend. This is your market snapshot for June 15th, 2024. We're going to start the video off looking at the Russell 2000. It's taking another hit this week. We can see it's still in this downward trend. We're just oscillating basically from the upper to the lower edge of these trends right here, trend lines I have drawn. We can see that it has hit a pretty deep oversold territory right here. Especially with the MACD right here. It looks like it's actually about to cross over. So I wouldn't be surprised actually if we kind of move up just a little bit. I wouldn't expect us to go much past this 2040 area before it pulls back. If you trade the IWM, which is roughly the same thing, so that's going to be roughly around the 200, 202 area. And if we want to look at that on the lower side, the support area, it's right in there. So that's what you're looking at with the Russell 2000, aka the IWM. The big mover this week was the Nasdaq again, or the Qs. And looking at the Nasdaq, it just keeps going higher. And I think this is primarily due to just a few of the tech stocks. So in the Nasdaq, mainly you have Microsoft, Apple, Nvidia. These top stocks are really what's just moving the market right now, it seems. Nothing else kind of really seems to be in much play right now. Just looking at the Nasdaq, basically the top three stocks, which is Microsoft, Apple, and Nvidia, account for roughly 1/3 of the entire Nasdaq. And then the next six stocks are the next third. So really just your top 9 stocks here account for 2/3 of this entire market. So you could really say that only about 9 to 10 stocks are what is actually keeping the market going up right now. So Nvidia was up 9% last week. Microsoft was up almost 4.5, 4.4. And I think Apple had a good week as well. Apple was up almost 8% last week. The Q, which is the actual Nasdaq itself, 3.51%. The SPY finished up 1.64, and we'll follow that up with the IWM. The IWM finished down 1.2. I think this is probably the third or fourth week it's been down. But obviously, you know, the Russell, we can see it's been going down. If we want to look at the ES, basically the S&P 500 has just been trending up for the last few months. This is a 1-hour chart. If we move over to a 4-hour chart, this has basically been the range that it's been trading in since about early April, actually mid-April, I'm sorry. One thing to note is that about a month ago in mid-May, the middle of May, we came out of this range here, and then we kind of hit a top right here. And this was kind of a support area. And then we can see that actually early last week, and then Thursday and Friday, the week before that, we got back above this area, and then it acted as a support area, I'm sorry. So that is an area to note, this 5350 area right here. So, you know, actually if we come back down, if we break below this lower trend right here, 5350 could actually see some support there in that range, as well as this 200 period simple moving average. And then we also have the 20 and the 50 simple moving average right here. But we can see that the 20 is holding pretty strong support right now, which is at 54.17. So in the news last week, the Fed held its meeting on Wednesday, and they basically signaled that there's probably only going to be one interest rate cut before the end of the year. I think we started off with 3 at the beginning of the year. So that 3 has been cut down to 1. So that's kind of where that's going right now. As far as the calendar for next week and what's going on, there's not really a lot of big news stuff. Unemployment on Thursday. You do have a few FOMC members giving speeches, and sometimes they can spook the market just by saying things. So just kind of look out for that if you're going to be trading around that time. So one file I haven't shown lately is going to be the the option volume and open interest tracker that I have. This connects to Thinkorswim. And what I've done is I've actually pulled up the SPX for next Friday's expiration. And we have the call open interest and volume as well as the put open interest and volume. So this open interest is actually going to be the open interest from the start of Friday morning. It actually will not get updated until very late Sunday night or Monday morning. But this kind of will show you where your pockets of large open interest are going to be accumulated at. One thing to note is these open interest values will change come Monday morning. So you may want to take a look at that. But if we want to look at some high areas of volume and maybe see if they turn into open interest for next week. And once again, this is actually Friday the 21st, so next Friday's expiration. We had a lot of calls traded here at the 55.15 area. And then as far as puts go, 54.20. We had more at 5400, 5350, and 5300. So you may want to look for those and just see if the open interest is going to change on any of those. But primarily what happens is when you have a lot of open interest accumulating in one area, you can kind of find that the market tends to move to that area. Okay, now for some cash secure put candidates. I went out to 621, which is actually next Friday's expiration. So this will be roughly just 6 days to expiration. This is a Saturday. We're choosing 1% out of the money. I just thought I would try something a little bit different here, just to change it up from the last couple of weeks because we were doing the longer duration trades. But if you're not familiar, all this is listed basically in alphabetical order. We have the put strike listed right here, the delta for that particular put. We have RSI over here, which is listed as, if you're unfamiliar, below 30 is going to be oversold and below 70 is overbought. We have the IV percentile listed right here. And we have the bid and the ask listed over here. And that is going to be the bid and the ask for that actual contract itself. I also have listed the percent away from the 52-week high and the 52-week low listed right over here. And then we also have earnings listed right here. This is going to tell you how soon the next earnings date is. And once again, this is going to list also, when it says 30 days, that's 30 calendar days. And that's as far out as this actually goes. So if it says 30 days, it could be longer than 30 days out. So something that's 8 days away. Like I say, this is 8 trading days away. So it is not counting Saturdays or Sundays. And this is going to be the same thing for the ETFs, 1% out of the money. Also Friday expiration. So hopefully you found this helpful. Thanks for watching. Have a great day and bye.